Hi everyone. Before I start this video, make sure that you're a part of my Discord server by joining the link in the description box below. And in this video, we'll be going over A-Level Accounting 2024 May-June Paper 4-2, question number 2. This is the structured paper 4, which consists of 2 questions. Each of them will be of 25 marks, and the total time limit for this paper is 1 hour. So ideally, you should be spending about 30 minutes in order to solve each question. And in this video as well, we'll be attempting to solve this question number 2 within 30 minutes. So without any further delay, let's get started. Suraj owns a factory which makes 2 products, product A and product B. He uses activity-based costing. The following information is available. Annual production is 400 units of product A and 500 units of product B. Budgeted per unit information includes total direct materials of 80 per unit for product A and 66 per unit for product B. The direct labor is 3 hours at 11 per hour, so that will be 3 times 11, which is 33 per unit for product A, and for product B, that's 6 hours at 13 per hour, which results in 6 times 13, so that will be 78 per unit for product B. Then we have been given the machine hours for product A as well as B, which is 3 and 6 respectively. Then budgeted annual production overheads are all fixed costs and are comprised of the following. We have quality inspections. We have been given the cost pool, and we have our cost drivers as well for quality inspections, order processing, depreciation, and other overheads. Then the selling price for each product is calculated using a markup of 100% on production cost. It means that the selling price will be equal to cost times 1 plus markup of 100%. We'll use this formula in order to get the selling price. Let's take a look at our first question. We need to state why cost drivers are used in the application of activity-based costing. So cost drivers are used in application of activity-based costing because they assist in allocating the overheads to activities. Let's write it down. Cost drivers assist in allocating overheads to activities. That is all for the first part. Let's move towards the second one. We need to calculate the selling price of 1 unit of each product. We have been given the markup, which means that we need our cost in order to calculate the selling price. So firstly, we need to calculate the cost per unit. We have product A and product B. Let's start with the direct material. For the direct material, product A has 80 per unit and product B has 66 per unit. Let's write it down. So we have 80 and 66. Then we have our direct labor. So for the direct labor, we've already calculated that product A will require $33, whereas product B will require $78. Let's write it down. So 33 and 78. Then we have our quality inspections. Let's take a look above. So the total of the quality inspections is 8,960, and 210 inspections is for product A and 350 is for product B. So the total number of inspections is 210 plus 350, which results in 560. I'm just going to divide the quality inspections among product A and product B as a whole, not per unit. So we first have quality inspections. Now for product A, out of 560 inspections, 210 belongs to it. So the total amount of quality inspections for A will be 8,960. We always start with the total overhead. Then we divide by the appropriate fraction, which is in this case is 210 by 560. That results in 3,360. Then we repeat the same process for product B. That will be 8,960 times 350 divided by the total of 560, which results in the amount of 5,600. Now we need to calculate these values per unit. For that, we just need to divide it by the number of units. For product A, we have 400 units, and for product B, we have 500 units. So product A has 400 units, product B has 500 units, which means that the quality inspection per unit for product A is 3,360 divided by 400, which results in 8.4. And for product B, that will be 5,600 divided by 500, which results in 11.2. Let's write it down. So for quality inspections, we have 8.4 and 11.2. We now need to repeat the same process to order processing. For order processing, 120 orders are for product A and 200 for product B. So the total number of orders in this case is 120 plus 200, which results in 320. Now the value of order processing for product A is, we always start with the total overhead, so 12,800 multiplied by the appropriate fraction, which is 120 divided by 320, which results in the value of 4,800. Then we repeat the same process for product B, so that will be 12,800 times 200 divided by 320, which results in the value of 8,000. Now for per unit, we just divided by the number of units. So for product A, that will be 4,800 divided by 400, which results in 12. And for product B, that will be 8,000 divided by 500, which results in 16. Let's write it down. We have order processing, which resulted in 12 and 16. Then we have depreciation. And in this case, we have the carrying value of 54,000 for product A and 72,000 for product B. So the total of the carrying value is 126,000. Now let's divide the depreciation. For product A, that will be 8,820 times 54,000 divided by 126,000, which results in 3,780. And for product B, that will be 8,820 times 72,000 divided by 126,000, which results in the value of 5,040. Now for per unit values, we just divided by the number of units. So for product A, that will be 3,780 divided by 400, which results in 9.45. And for product B, that will be 5,040 divided by 500, which results in 10.08. Let's write it down. So we have depreciation, which we calculated to be 9.45 and 10.08. Now for the last one, we have other overheads of 18,000, which are to be apportioned on the basis of units produced. So the units produced is just 400 for A, and for B it's 500. So the total number of units in this case will be 900. And since we need to calculate the other overheads per unit, it's going to be the same for both product A and product B. We can just divide it by the total number of units. So 18,000 divided by the total number of units of 900. This results in the value of 20. Let's write it down. So we have other overheads of 20 each. These are all of our costs. So now we can figure out the cost per unit. For product A, that will be 80 plus 33 plus 8.4 plus 12 plus 9.45 plus 20, which results in 162.85. For product B, that will be 66 plus 78 plus 11.2 plus 16 plus 10.08 plus 20, which results in the value of 201.28. Then we have been given the markup. And the formula to get the selling price is multiply the cost by 1 plus 100%. And 1 plus 100% is basically 2. So cost times 2 will be our formula for the selling price. That is what we require. Let's calculate the selling price now. That is just going to be cost times 2. So for product A, that will be 162.85 times 2, which results in 325.70. For product B, that will be 201.28 times 2, which results in 402.56. That is all for the second part. Let's move towards the next one. And we have been given the working section right here. So you need to show all of your workings for the division of overheads using the activity-based costing, so that you get your markings correctly. Now we have the additional information. Suraj is considering using machine hours rather than carrying values to allocate the depreciation cost. We need to calculate the change in selling price of one unit of each product if Suraj uses machine hours as a cost driver for depreciation cost. So we have product A and product B. We can start with the previous cost per unit. Let's take a look above. That will be 162.85 for A and 201.28 for B. So 162.85 for A and 201.28 for B. Then we need to remove the previous depreciation from this cost because we are now apportioning the depreciation using machine hours rather than the carrying values. Let's take a look above. Previously, we had the depreciation of 9.45 for product A and 10.08 for product B. Let's write it down. So 9.45 for A and 10.08 for B. Now let's calculate the new depreciation based on machine hours. And in this case, we only have the machine hour per unit. We need to calculate the total machine hours first. So for product A, we have a total of 400 units. So 3 times 400 will be the total machine hours of 1200. For product B, we have 6 hours per unit and we have a total of 500 units. So 6 times 500 will result in 3000 machine hours. So the total machine hours in this case is 1200 plus 3000, which results in 4200. Now for A, let's divide the depreciation. We start with 8820 and 1200 out of 4200 belongs to A. So 1200 by 4200. This results in 2520. We repeat the same process for B. So 8820 times 3000 divided by 4000, which results in the value of 6300. Now we need the per unit value. So for A, that will be 2520 divided by 400, which results in 6.3. And for B, that will be 6300 divided by 500 units, which results in the value of 12.6. Let's write these new depreciation per unit within our statement. And we need to add it so that we can get the new cost. So we have the new depreciation. For A, we calculated it to be 6.3, and for B, it was 12.6. Let's calculate the new cost per unit. For A, that will be 162.85 minus 9.45 plus 6.3, which results in 159.7. For B, that will be 201.28 minus 10.08 plus 12.6, which results in 203.8. Now we need to calculate the new selling price. That will be cost times 2, so 159.7 times 2, which results in 319.4. And for B, that will be 203.8 times 2, which results in 407.6. The question asks us to calculate the change in selling price. So let's write down the previous selling price. It was 325.7 for A and 402.56 for B. Let's write it down. So 325.7 and 402.56. Now let's calculate the change in selling price. For product A, we can see that the selling price per unit has definitely decreased. So we have a decrease, which is of 325.7 minus 319.4, so 6.3. Then we repeat the same process for product B. We can clearly see that the new selling price is higher, so there is an increase. And the increase is of the difference, so that is 407.6 minus 402.56, which is 5.04. That is all for the third part. Let's move towards the next one. We now need to explain the relationship between the choice of cost driver and the profit. The first thing we need to understand is the choice of cost driver will not affect the total cost because the total cost is still going to remain the same. The apportionment is going to differ due to the choice of cost driver, which means that the total profit will also be unchanged. And due to the choice of the cost driver, the profit per unit will change only when we are using a percentage markup. But if we have a fixed markup amount, then the profit will not change. Let's write it down. The choice of cost driver does not affect the total costs, as it just moves costs between products. It will affect profits if products have a percentage markup but will have no effect where a fixed markup is used. That is all for the fourth part. Let's move towards the next one. We have been given additional information. In recent months, actual results have been unfavorable in comparison with the budgeted figures. On one occasion, the manufacture of product A had been stopped and sales lost because the sole supplier of some of the components of that product had been unable to fulfill Suraj's order. Suraj is considering manufacturing these components in his own factory instead of buying them in. He estimates that the total direct material cost of product A would fall to 30 per unit and the labor requirement for product A would increase to 5 hours per unit with the wage rate unchanged. So the wage rate is unchanged, 5 hours multiplied by, let's take a look at the wage rate for product A. That was 11 per hour. Let's write it down. So the new direct labor per hour will be 55. Previously it was 33 as the hours per unit were only 3 hours. Then the budgeted depreciation cost would increase by 8,000 per annum. Suraj is unclear whether overheads other than depreciation would be affected. We need to advise Suraj whether or not he should manufacture these components for product A in his own factory. We need to justify our answer, and it should also include any effect on the costs of product B. Okay, this is of 7 marks. Alright, so 1 mark will be reserved for the decision, 2 marks for advantages of manufacturing these components, 2 marks for disadvantages, and 2 marks will be for the effect on the cost of product B. Let's start with the advantages. Okay, let us do the calculation first. We have our total direct material per unit to be 30 now, direct labor to be 55, and we have a cost of 8,000 per annum. That is the increase in the depreciation cost. So for product A, we are producing 400 units. Now let's talk about the changes. Previously, total direct material was of 80 and the labor was of 33. Now the material will be of 30. So it means that the cost has been decreased by 50 per unit, which is advantageous. Then we have a disadvantage that our wage rate has increased to 55 from 33. So it has increased by 22 per unit. And again, the depreciation cost has been increased by 8,000. So that should also be subtracted. So it's basically 400 times 50 minus 22 minus 8,000, which results in the positive value of 3,200. So this acts as the first advantage. It means that we can decrease the total cost of the business by 3,200. So it can decrease the total cost of the business by 3,200. Alright. Then second advantage would be that he could use any spare capacity in the factory in order to manufacture these components. So he could use any spare capacity in the factory. These are our advantages. Let's talk about the disadvantages now. The very first disadvantage is that maybe additional workers might not be available in order to manufacture these components. So additional workers may not be available. And since we are talking about manufacturing the components, we might need some new machinery in order to do so. Let's write it down. He may require new machinery to manufacture these components. Now we can talk about effect on the cost of product B. So for product B, we need to take a look at our cost drivers, because manufacturing our own component can also change the cost drivers. There might be a huge impact on order processing, because now for product A, since we are manufacturing the components on our own, we will not have to order for those components from some other supplier, which means that the number of orders for product A will be lower. That way, more amount of order processing will be allocated to product B, which will increase its cost. Let's write it down. Lower purchase orders for product A will allocate more overheads of order processing to product B. Then secondly, we also have quality inspections. Now for product A, we are producing our own component, which means that the number of quality inspections will be needed more for product A as compared to product B. That way, more cost for quality inspections will be allocated to product A, and as a result, the allocation of overheads to product B will decrease. Let's write it down. More quality inspections might be needed for product A, which will increase the allocation of quality inspections overheads to product A. As a result, allocation of overheads to product B might decrease. Okay, these are all for the effects. Now, based on these factors, we need to make a final decision. Personally, I would suggest that Suraj should manufacture these components for product A in his own factory, as he will not be dependent on supplier. Let's write it down. Suraj should manufacture these components for product A in his own factory, as he will not be dependent on the supplier. That is all for this part, as well as this entire question. If you found this video useful, make sure that you like the video and leave a comment below, and make sure you subscribe to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.